enabled.
Kotak Mutual Fund presents Invest Mentor in association with Network 18.
Hello and welcome to Invest Mentor presented to you by Kotak Mahindra Mutual Fund in association with Network 18. Now this is an investor education and awareness initiative by Kotak Mahindra Mutual Fund and I'm Sonia Shenoy. On today's show we have a very interesting topic. We discuss gold as an asset class. Now a lot of us, our parents, our mothers, grandmothers have purchased gold in the past for luxury, for leisure, for weddings. But as an asset class, how have the returns been in the past, and is it a lucrative investment for the future? We have one lady and one gentleman joining us on the panel today. We have Manish Mehta, the Joint President and National Head Sales, Digital Business and Marketing at Kotak Mahindra Asset Management Company, and Lakshmi Iyer, President and Chief Investment Officer, Debt and Head Products, Kotak Mahindra Asset Management Company, joining us now. Thank you to both of you for being with us. Now, this is a common dilemma. Manish, I want to start with you. How much gold should one own in their portfolio? And at a time when other asset classes like equities are doing so well, does it even make sense for someone to have gold as a large chunk of their portfolio?
So, Sonia, I think over the last couple of years, gold as an asset class has started to emerge in the mindsets of a lot of investors. As you mentioned in your opening remarks that, gold historically has always been for jewelry purposes or for luxury purposes. But a lot of investors have started looking at that in their portfolio as an alternate investment. As you're aware that, gold works as a perfect hedge against inflation. And it is advised that, at least about 5 to 10% of your investment portfolio can be looked at asset classes like gold as an investment option.
Lakshmi, come in on this because, traditionally we've seen our mothers, grandmothers buy gold, wear gold jewelry. And earlier it used to be regarded as a very big status symbol to have a lot of gold, and perhaps more for South Indians, like you and me. But now not so much, right? People have gotten a bit more savvy. You tell us, from an investor standpoint, how should one approach gold?
Clearly gold has that magnetic pulling. Of course, for South Indians, no doubt about it. And I hail from Kerala, which is the hub for gold. There is barely a wedding or there is barely an occasion where you see people not wearing or consuming gold. But the reality of life is that it has various other utilities apart from being just an aesthetic instrument or an ornament which can be donned. And as an investor, I think it is very imperative to have multi-asset classes as part of your portfolio. So if you are an investor who invests in equities, if you are an investor who invests in fixed income, so basically if you are a financial asset class investor, it is very imperative that you have gold in your portfolio and treat it pretty much similar to a term cover or a term insurance. It is very incidental that gold makes money for you, but it's the financial asset class that actually pulls up your entire portfolio and your returns over the tenor of your investment stint. So I think that's the way the investor mindset has been morphing in the past decade or so. And I think that is exactly the way investors should do this asset class.
But Lakshmi, just a follow up there, you were talking about how weddings in Kerala have only gold as the major part of the event. I remember when I got married, I was also wearing quite a bit of gold. And now when I think back, if I had, rather than investing in